Jamie, Lawrence, we're here from iCapital Connect. Really exciting day today. You both announced a partnership about UMA, first of its kind UMA, to enable private markets investments in portfolios for wealth advisors. Let's get into it. Jamie, let's hear from your perspective at BlackRock. You've been doing models for a while. What's so significant about this partnership?
Yeah, so first of all, I have to say this conference has been incredible. Really inspiring to see so many people come together and try to figure out how can we democratize access to private markets? How do we help advisors come together and build a portfolio holistically that includes public markets and private markets in one seamless, easy way? And so that's what we aim to do at BlackRock. And for years, we've been doing that with models, right? Public markets, traditionally public markets. And you think about 10 years ago, there was no such thing really as a model. Today, that marketplace is 5 trillion. We think it'll grow to 10 trillion in the next few years. The problem is those models are all public, right? And when we think about enabling advisors to capitalize on the full power of capital markets, that includes private markets too. The problem is it's hard to implement. And so today we announced, in partnership with iCapital and GeoWealth, a holistic model that allocates assets across public markets, private markets in one unified managed account and makes it easy for an advisor to do that.
That's such an important point. I'm going to hang on to that last phrase, making it easy for an advisor. Lawrence, you've talked about this a number of times, meeting advisors where they are. Why is building this model portfolio solution in the UMA so important for advisors and meeting them where they are?
Where we are in the evolution of the market right now, we're well past the early adopter phase where people are willing to put up a lot of inconveniences and challenges to allocate. And right now, we're at a point in time where it's, I think, much clearer to the advisory community broadly that alternative assets in conjunction with their existing portfolios can help advisors serve better solutions for their clients. And so what we've announced, where we can actually build model portfolios that include both sort of liquid investments as well as the private investments, we're actually giving advisors the capability to incorporate private markets into portfolios in a way they're comfortable working. And I think that's really key to, as you said, meeting people exactly where they are.
On that point, Jamie, BlackRock's obviously been an innovator in model portfolios. What are the lessons you learned from building models, providing technology solutions to advisors that you're now bringing to bear today with this UMA?
Advisors were building these portfolios, which were really just a collection of good products and not necessarily an intentional asset allocation, an intentional portfolio selection or security selection process. And the rebalancing was hard and it was a lot of work. At the same time, you had advisors who needed to grow their business, right? And they needed to spend time with their clients and their customers and bring on new clients. And so those two things were at odds. And so what the model marketplace has done and what we innovated was the ability to help an advisor build these portfolios. And by the way, the advisor could customize them if they wanted. We would work with them to customize these portfolios and take on their asset allocation IP. But we took the administration and the burden off of them so that they could then seamlessly deliver these models and spend more time with their clients doing what they should be doing, which is building their business and serving their clients.
What you hit on is, I think, a critical theme to discuss in private markets. It feels like we're at the point where there's this balance of customization with scale. So Lawrence, how do you think about that concept with this new innovation, customization with the ability to scale a business?
We think it's key. If you step back and you look at how have people been operating historically, there are some people for whom a sort of defined model makes a lot of sense. For other people, they'll want to express their own perspective on what the allocation should be, the mix, et cetera. And one of the important things in terms of kind of meeting people where they are and making it easy for them is to give them a technology platform that allows them to do either. It might be that they buy the models that are completely aligned to today or set today, and in the future they move more towards some custom approach. The key is irrespective of what they try to do, the technology allows them to implement either solution in a seamless and efficient way.
On that point, other asset classes have gone through market structure evolutions, equity, fixed income derivatives, from pre to post investment. They've electronified, made it easier for people to access markets, and then crucially post trade, enable them to better manage, track portfolios, investments, valuations, et cetera. How has this been made possible by the market structure evolution in private markets? Both of your firms are innovating in market structure. You're building core technology operating systems to some extent in terms of how you work with advisors. Jamie, from your perspective, what's been the market structure evolution in private markets that's enabled us to get to this point?
Yeah, so first of all, so much credit to what iCapital has led in this industry, which is the democratization of private markets through technology, through data, through workflows. We also look to do the same through product structure, right? So thinking about different wrappers, different vehicles to bring private market exposures and access to and investors, again, tapping into the power of the full capital market. We innovated on ETFs with iShares. We're innovating on private markets through some of our structuring. But product can't win alone. And so our belief, our very strong belief, is that to get the full advantage of private markets, you have to look at it through the lens of the whole portfolio. And it has to sit alongside every other asset that advisor is managing for their clients. And so that's why I think this is so moving of the industry, in that we have this whole portfolio approach. It's not just access to private markets, it's access to private markets in one portfolio wrapped in a way that actually gives that strategic asset allocation and exposure.
There's so many aspects that go into enabling an advisor to create and manage a whole portfolio. There's everything from sourcing the right investments to education to the infrastructure, data solutions. You've obviously built the end-to-end solution, Lawrence, at iCapital. How does that all factor into the pieces of the puzzle of putting everything together for this UMA?
I think it all matters quite a lot. And if you think about my earlier comments in terms of where we are in the adoption cycle, almost by definition, the next wave of advisors, they just have less experience with the asset class and their clients perhaps as well. And therefore, the educational piece, all of the things that we've been doing and talking about for years are as important as ever. And I think that will be true for the years to come. So the whole upfront piece around education and even things like compliance, there's a lot of technical issues, navigating AML, KYC, all of these things that are fundamental to the process. The more we can automate across those different dimensions, the easier the experience is. And I think the better outcomes advisors and clients have.
And just even on that, I mean, the education previously was education around what are private markets, why should you use them, what's the difference between credit and equity and infra and real estate and everything else. And today, the education is now about what is the role of these asset classes in your portfolio and what is the impact they have on that broader portfolio.
You take it a step further, what is the role, but then how do you build a portfolio? And so tools like Architect that we've come up with to help advisors think about how do these, delivered in a model portfolio, how does that model impact the rest of my portfolio? And giving advisors tools to do that work so they understand the implications of their different investment decisions is really critical, and if you will, an extension of the whole educational process.
When I hear you talk about this, my mind goes to this is a TAM expander. So this expands the market for those who are using private markets. Sure, there's massive opportunity to grow the wealth advisory channels, investments in private markets, but it also feels like this solution unlocks a whole new set of constituents who can now use private markets. Talk to us a little bit about that.
One of the things that I find so exciting about this is there's really, we look at our clients every single day. We study them. What are they doing? Where are they going? And the two biggest trends are the growth of models. Why? Because they want to scale their practice so they can spend time with clients. They want to professionalize and kind of co-CIO their solutions. But again, problem statement, public markets only. The second big trend is this increasing demand for private markets. And the average portfolio, 2-3% at best in the wealth space, yet we hear from CIOs every day that it should be 15-20%. And certainly it's somewhere in between. And so to your point, what this does is it answers those two needs in one way, right? And so these model portfolios, we know advisors use them. We know they can customize them if they'd like to. And we know to date they haven't had private markets. Today they do, and that makes it easier and opens up the market to many more advisors and many more investors.
I think the market is is telling us it's the right time. You know, we are trying to provide the capabilities for the market to do what they, and as Jamie said this, what they are telling us they want to do. The early days of iCapital, the big issue was access. That's not so much of an issue anymore. A lot of folks understand that they need to address this channel. It's now about how do we deliver these solutions in a way that is the most effective and helps advisors be the most successful with their clients. They continue to tell us that 2 to 3% is not enough. They want to get to, if you look at the CIO suggested allocations, 15 to 35%. Whether we get to 15 or 35% is not so important. The point is that the market is clearly suggesting they want more exposure here.
Jamie, from your perspective, you obviously have a heritage in public markets as a firm. You're very big in private markets as well. Why is this so important that this is a holistic solution?
It goes back to our mission, which is, truly being able to make it so much easier for our clients, institutions and advisors, their clients and constituencies to harness the power of the full capital market in service of better outcomes for our clients. That being said, I also believe that this is just the start, right? And so when you think about these model portfolios, these portfolios that are customizable, the question becomes, where can we customize next? And even as you think about taxes and tax managed outcomes and the importance for high net worth investors who seek private markets, tax managed solutions, all in one, options, overlays, structured products, this really becomes this chassis that you can continue to innovate and continue to better meet the needs of unique clients.
You both mentioned that this is just the start. You said there's a lot that's coming next. Jamie, paint us a picture in your mind of this is just the start for public-private models all in one place. What does this look like going forward?
So going forward, this looks like an expansion of what we have in the public side and what we have on the private side. It looks like an inclusion of tax-managed sleeves and tax-managed overlay. It looks like an inclusion of option overlay, structured products, annuities. It includes an expansion into all of that. The other area that I'd say this expands is, again, I think both of our firms are really just aiming to make it easier for advisors no matter where they are and where they do business. And so part of our mission is, and I'll speak for BlackRock, is really connecting the ecosystem and being able to help advisors wherever they are be able to deliver on this. And so that's why we always look for partnerships with firms like iCapital and others to do that.
Lawrence, from your perspective, how do you think about this unfolding given the technology infrastructure that you built?
We've been trying to be the connective tissue, if you will, for the alternative industry and bringing together all of the major ecosystem players in our distributed ledger architecture. And so firms like custodians, administrators, transfer agents, tax preparing firms, auditors, obviously the wealth manager and the advisors, giving them one platform to connect, to reduce the very large number of sort of life cycle frictions, if you will, multiple reconciliations, just to give one example. So making it easy for all the players to connect into one operating system so that they can scale their business at a much lower cost way. That's key.
What in your mind, Jamie, is the most exciting aspect of building this new product and creating this solution for advisors?
It's helping the advisors. It's hard out there for advisors, right? I mean, they have such a noble role in helping to plan people's futures, their dreams, their retirements, their wishes and needs, and it's really hard. And this is just one way for us to help make it easier for them. We aim to be their partner in all things. And so this is what gets me most excited.
From our perspective, we spend a lot of time on education. We're still talking about an asset class that isn't necessarily second nature to people, right? And so we believe that working through advisors gives the client, because at the end, it's all about the client's success in terms of their investments. We think the odds of a client making better investments goes way up with the help of an advisor who has the financial sophistication and who also understands the real important elements of a client's goals, what they're worried about, what they're not comfortable doing, what they are comfortable doing. And we think that working through advisors just raises the probability that the clients have better outcomes.
Well, this itself is an evergreen topic. I feel like we'll be talking about this for years to come, because this is such a big deal for the industry. So it's been a pleasure talking about this. Thanks so much.
Great to be
Thanks so
here.
much, Jamie. Likewise.
Yeah.
Congratulations on the partnership.
Thanks.
This is really exciting for the industry.
Thank you.